today. Our next guest sits on the House Financial Services Committee, and for his view on the Fed, the banks, and more, we welcome Representative Brad Sherman. Congressman Sherman, welcome. Good to have you with us. I'm going to ask you an interesting, I hope interesting, macro question about the economy as you see it in your district. How healthy is it on a scale of 1 to 10?
Look, we want the economy to be better, so even when it's above average, and I think it's about average now, we're anxious and we want everyone to be employed. We want everyone to be able to afford a house. But I think, people certainly see the inflation, and you see more inflation than actually exists. When the price of onions goes down, you don't notice it. Price of lettuce goes up, you certainly do. So I think the economy is pretty in pretty good shape, but not good enough.
Do you feel as though we just had Jamie Cox sitting in your seat? He's been critical of the Fed. I know administrations don't like to talk about the Fed. They let that be the Fed's business. But you're not so constrained. How do you think the Fed has played this and its efforts to blunt the effects of inflation?
I think they're playing it about as well as they could. Keep in mind, we've never had a COVID we had the Black Death. That was 1300s. Interest rates, I think,
there was no Fed then.
Yes, there was no Fed then.
Yeah.
So nobody really knows how to run an economy during a pandemic like this. They did about as good a job as they could. I'm sure somebody will write a book saying they should have done a little bit more here, a little less there.
Yeah.
So many different topics we could touch on. Crypto should possibly be one of them, given the massive crackdown we've seen all of a sudden by the SEC. Is this the end of crypto in America?
Hope so, don't think so. But
you hope so?
Yes.
Why?
Well, this is an investment network, and people might say, hey, it could go up, it could go down. The question is it good for America? And the answer is no. If you listen to the promoters, they say they're there trying to create a financial system that's impervious to the federal government, so that it's available for sanctions evaders, so that the U.S. no longer has this major role in international affairs. And the definition of cryptocurrency, what does it mean? Hidden money. Who needs hidden money? Tax evaders, sanctions evaders.
Let me just try to paraphrase their defense, which might be, hey, we're actually trying to keep costs down for the average American. That the current financial system, it charges, look at the payment networks and the interchange fees they charge just for access to it. Look at the banks, which basically charge you for checking or have all sorts of hidden ways of doing that. Whether it's superior or not, their argument goes beyond just disintermediating America from the global financial system.
They've been around for a while. At one point, they were $3 trillion, and they didn't make it easier or cheaper to buy a sandwich at Subway. You go to Subway, you can use a debit card, you can use a credit card. If you've got crypto, what do? You have to change it into money, then transfer it to your debit card, and then buy a sandwich. It is not a payment system. It is not a currency. It is an attempt to make trillions of dollars by creating a currency.
Does it need to be regulated out of existence, or do you think that the market will take care of what you would like to see, which is it to be gone?
Well, it has attracted so many charlatans, and it certainly needs regulation. Sam Bankman-Fried isn't the only one. Ultimately, I think crypto will fade because of crypto. There is no logical reason why Bitcoin is more valuable than Hamster Coin. And if Hamster Coin is there, what about Cobra Coin? And then a year ago, I said, well, there's no Mongoose Coin. Maybe there should be a Mongoose Coin. And they created one, and for a while, it was worth millions of dollars.
Should we just read this as Congressman Sherman is a little, on the cautious side of innovation? Because on AI, I hear some similar concerns, as opposed to maybe full-throated excitement about what that might bring.
Well, I'm certainly in favor of innovation, but not every innovation. I mean, the Cayman Islands has innovated a financial system designed for nefarious purposes. We don't need to catch up. Peru's well ahead of us in cocaine cultivation. We don't need to catch up.
So let me, if I may, to pivot entirely from this, but ask about something that really directly affects the cost of living for your constituents. How concerned are they about the lack of insurers in California? You mentioned home prices in your first statement about making home prices, and housing affordable for everyday people. When you have major insurers pulling out, how is that going to affect people's ability to make a go of it? And whether it's buy new housing, renew their existing policies, they must be a little scared right now.
I don't think they're that scared yet. There's still competition, except when you're on the urban-rural interface, when you're right there with the sagebrush. But aside from that, I think people are still being able to get insurance policies. But yeah, it's a bad trend, and you want as much competition as possible. And we're going to be talking to the insurance commissioner very soon.
Let's quickly pivot to banking. A couple of the large bank failures occurred in your state. Do you see those as failures of regulation, of regulators, or of bankers?
Yes.
All three.
Look.
Need more regulation.
What we need is for the bank regulators to look at interest rate risk. Which they didn't. Silicon Valley Bank had hedged its interest rate risk, and it sold its hedges. Talk about insurance. They canceled their insurance on interest rates going up. They pocketed the money. It went into profits. The profits go into bonuses. They made a higher bonus in 2022 because they put themselves on a road to go bankrupt in 2023.
Very interesting. Congressman Sherman, thank you very much. Good pleasure having you with us. I think it's the first time on CNBC, or at least with us. We thank you for coming.
First time on the show.
We appreciate it.
Still